Okay, hi there, guys. Just let me know whether you can hear me, and we'll rip into it. A bit late on this morning. Had to get myself a coffee and get organised. How are we doing, Andrew and Bobby? Good. That is the fastest to type. Ah, fantastic. Thanks, mate. All right, let's get going. Welcome to TradeSetup. Just the morning overview or the market prepping session. So we'll keep it short and sweet. We'll try to keep it short and sweet. G'day, Lauren. Profit taking day. Mate, I won't lie to you. I have no idea. This market, we were talking about this a while. I've been bearish, obviously, with the market, but it doesn't seem like the market is bearish, if that makes sense. So that's why we've been starting to, edge into some shares, because you've got to trade what you see and not what you think. And if you get caught up too much thinking, no, I'm going to be right, and you let the ego trade, then you get in that problem, especially if this market just continues to take off. And there's arguments for and against, obviously. Now we'll look at the US a couple of nights. So they're a couple of nights, we ended up about 600-700 points in 2 sessions. They're coming into payrolls tonight. G'day, Ola. All systems go. Yeah, I think so. But I mean, I'm always erring on the side of caution. You get times like this when you've got to look at what's going on. The market got some positive news out when Hong Kong, um, but they actually didn't do anything, and that's the thing I sort of had wrong from what I was reading. It says, I can't remember her name now, the leader of Hong Kong, or Prime Minister, or whatever you call of Hong Kong, um, walked back on their extradition treaty, but they haven't actually done anything. They promised to look at it. Um, they promised to look at it come start of October. Now that's not reneging on it. All that's doing is saying we might do something the start of October when we have a meeting. But at the moment, it's still in place, and the market got buoyed from that. Yet it's sort of shallow news. Then you've got buoyed again on Brexit, but that's been going back and forward for years, and that causes issues, and it doesn't cause it. So there's kind of some positive news on a hard exit being potentially, was it negated? So that's good. And then you've got obviously China come out yesterday to buoy the market and say, we're going to have high level meetings. I mean, how many times have they thrown out that rubbish and not done anything? And then lo and behold, you got tariffs increasing. So it's kind of one of those things when you weigh up all that, the market wants to go up at the moment, and it's wanting to go up. It's just how far we're going to go up. So when you've got all this negative news that drives it down, and then none of that changes, and even since then they've raised tariffs a bit more since I guess the sell-off. The US, they've just had new tariffs going on, both US and China. But all they've done to buoy the market, all they have to do at the moment is just say, hey, we're going to have a meeting. So that's great. And I think that's the key thing at the moment. And if you're going to remember too, if they do have some sort of agreement and they come forward, I think you get that rush higher, but it's going to be factored in. By the looks of it, it's going to be factored in if we keep heading higher into any form of announcement. Now, on the flip side, we can't sort of deny, I guess, that the US is having half decent data coming out. So manufacturing is a problem because it's been crimped from tariffs. But what the services sector is actually doing all right. They had ISM numbers out last night, which were, I think, slightly better than expected. Jobs numbers, and this is the funny thing, they had employment data out, which was more than expected, which sort of sets the tone for fairly solid numbers out tonight. And payrolls, that's the big one at 10:30 tonight. They had unemployment numbers. It sort of got pushed aside, which was slightly higher as well. So unemployment claims, sorry. So all in all, I guess when you look at that, they're not doing too bad. As in the US, their growth is still there. It's at the lower end of the scale, which I guess tariffs is a big cause of that. But I think other areas of the economy in the US is actually growing okay. It's a modest growth. That's okay. It's well within the Fed Reserve's limits of, I think it's 1 to 3%, somewhere around there. They're towards the bottom end. That's where they're talking up. I mean, that's why Trump's trying to bully rate cuts. But the Fed is sitting there going, we look at the numbers, we always have, and the numbers are not so bad. Okay, we've cut rates, probably a preemptive move. They're potentially looking at cutting rates again, but if they give an assessment where, or they when in their statement saying, look, the numbers are still okay, payrolls are coming out okay, as long as tariffs don't get out of hand, then everything, all being the same, all remaining the same, we're not going to cut rates. And they're looking potentially 3 rate cuts. That's why there's been whipping around in the dollar. Um, and the dollar's sort of getting supported by rate cut, or the theory of rate cut, or the idea or expectations, is the word I'm looking for, of rate cuts. And then they come out with some good numbers, and it's not potentially happening. So all in all, I think we've got a lot of headwinds to keep an eye out for. So we'll just go over to, I'll go to the big term, long-term charts. I just want to go on the daily of what we're at. Don't worry about that. So we'll start off with the S&P. You've got to look at where we are. We've just popped up. And this is not bad support. And all in all, it is a high low on the daily time frame. And you look at this big sell-off here. This is your longer term. We'll go right back. Let's just build it up from a weekly. Just look at this is the broader market, US S&P. So this is the trend. Essentially, you could say, all right, we started from here. That's where the base was. And we've been going up on that sort of tangent. Whoops. That sort of tangent for a long time now. It's been a very long bull run. Now that is still well on track. You've got a lot of room to move on the downside if we are going to tip over something like we did in September. But even that flush out didn't get anywhere near sort of that trend. Well, we probably did just say it run into that trend line, and it rebounded. Bang, up we go again. So that trend is still intact. You've got a higher low potentially forming on the weekly and the daily. And look at where the stochastics are. Got sold down quite well. There's a higher low, good zone. So that selling pressure is getting held up compared to the last time when it sold down, and that was in June. Yeah, so the little sell-off in June popped up into all-time highs, pull back again. So the selling pressure is getting soaked up on the weekly. So there's all these sorts of things which, if you're looking purely at the technicals, there's a good reason to, once you come smashing down here quite quickly, there's a good reason to sort of stand aside. But just because we're in all-time highs, I think people get a habit of going into cash. We're in a bull run, and they start looking at news, which I'm doing, and has worked out okay. But at the moment, we've got to try to reassess what is actually happening. What are we seeing as opposed to what are we reading? Because the news, they're not traders; they're just pumping out news. Whatever sells, whatever makes you pick up a newspaper and pay for it, they'll put in there. Whether right or wrong, whether it is, we are going to recession or not, they don't care as long as you buy the paper. But what we want to focus on for trading is what is actually happening. What is the market saying? At the moment, we've just popped up above this 29.50 level, which is retested a few times now on the S&P, and we just popped up above it. So we're not up towards the highs, but look how much that sell-off, we've made that quite a bit, and we've got these 1, 2, 3, 4 tests essentially of this 28.30 zone or 35, and held, and looking to the highs. Nothing to say we can't roll over from here and actually come screaming down and take it out. But at the moment, that's, on a daily is relatively bullish. The weekly is relatively bullish. It was just looking tentative at this stage up until, pretty much today, overnight. It was popped up, and the Dow's, I think it was a similar story. Yet the Dow's in that zone where, it's touched there 1, 2, touched up here before we had that sell-off, and then we pushed straight up into all-time highs. So there's nothing to say that can't be a washout, and we roll over from here, and we have broken that minor trend there. And actually, take a step back onto the S&P. This trend up from here is being broken. That's what I sort of got my eye on at the moment. And the fact that we've broken down means that maybe we're going to get some heavy price action. All these things are up in the air at the moment. At the moment, we rallied 600 or 700 points on the Dow in the last couple of days. And we just pushed back up above that 29.50. So I think that's the S&P. On the Dow, we're right there at the moment in the zone where we could go either way. We could be bullish, but if you're bullish, if we get some sort of action, you pull back, build a higher low in here, that's going to get the bears all excited, and then turn around and support that again at a higher level. Then you'd want to be sort of all guns blazing, I guess, on the long side for now, forgetting what the news is actually saying. But we'll see. We'll see. Again, the tariffs are the main focus, and all this has been buoyed on the idea that they're having high level talks. They've done that a few times before and just turn around and walked aside and raise tariffs. They couldn't come to some sort of agreement. So why is this time different? The market's just getting overly excited, and probably a lot of this could be short covering. All the bears have been shorting in here and finding out they're probably on the wrong side of the market in the short term. Maybe they might have another go up here. Wait till it exhausts up here and then short again, and we get this big sell off. We don't know just yet. We'll go over to, let's just look at quickly. So that's the DAX. That's kind of bearish in a way. You've got this trend up, which seems to be broken. We may be resetting. You've got this big push down. We're popping back up. There's no reason why this can't be a lower high. And the market starts to free fall a bit. But again, we just have to wait and see. They got their own issues over there. There's Italy is what I'm trying to think of, that word. They had a few problems. They're starting to form government and settle down their economy, which is probably good signs for the EU, which could be taken, good sign for the EU here. There's maybe more stimulus. This bounce here could be on the back of potential stimulus for the EU. We just have to wait and see. That's next week for the ECB. We'll be out next week talking up whether they're going to add a lot of stimulus, a little stimulus, or some form of what sort of level of stimulus to the economy over there to try to buoy it. I mean, I guess we can't forget that when you're talking stimulus, it's not because we're not getting growth. The market's not getting the growth that they want. So why are they so keen to go higher? It could just be that euphoric, we didn't go down, so we're going up type of mentality. But then you might get that secondary wave of selling again. We just have to wait and see. Just trade what we see. We've got a few longs at the moment, which are probably going all right. Gold, we're probably going to get knotted on a bit, but we'll see. Let's just go to the XJO. Again, that's if you're looking at. We'll go to the weekly. Let's just get rid of this. This is from a chart I've done earlier. Go to longer term chart. That weekly, you look at that, the pressure is on the downside. It's just sitting around the MAs. I mean, there's no reason why this can't pop up, roll over. I mean, anything at the moment is up for grabs. And the fact I don't like that it's just pushed through the highs, washed them out, the all-time highs, and pulled back. And it's just broken this little trend, but the longer term trend is still way down here. So we could hold the longer term uptrend. That's probably about right, isn't it? Since the GFC, since 2009, we can hold that, but heat come out and still drop 400, 500, 600 points, 700 points easily. So it could be bearish short term, but the longer term trend is still up. You see what I mean? So depending on what sort of charts, if the bulls or bears, what they're talking about, what charts are they looking at first? So yeah, that's it. That's it there. So that's your weekly. I mean, your weekly's in the oversold territory. It's potentially going to get, it could get soaked up here. Last time we were in oversold was way down, below 5,600. We pushed down here, soaked up there. We got down to oversold here, getting close to oversold and getting soaked up. There's nothing to say we can't look at this stage here when we're way up here at around 62. At that stage, we were somewhere around here on the stochastic. So same sort of scenario. So anything's on the cards at the moment. I just want to point that out. The market's bullish. There is reasons why it's starting to go up. We can't deny that. It's still going up. But at the flip side, you just got to be on guard. So no reason why you can't trade long at the moment and jump into some good handy stocks. But always be wary of what could happen and what you're watching for. At the moment, we're holding a little higher low potentially. We're probably going to open up. I don't know. Let's just see. Where's the SPY? So the SPY is having troubles up near the overnight highs. They're at 66.30. We're looking to open up only 10 points. So we're at the moment 11. We've opened up 20. So we just pushed up a bit higher. We'll just see how this market goes, holding that little high low there. But that action is not, we could be getting a bit heavy up here. We could be extending a bit more on the daily, and that would maybe play into another sell-off on the weekly. I mean, we don't know. We don't know. We'll see how we go. Gold got smacked, and that's one thing. We'll just look at the charts now. Gold chart here got smacked. This is the hourly chart, don't forget. So, we washed out this high, which you probably would have expected it to do. Wouldn't have expected this basically smashing back down through support. If we go to, just get onto the daily. the trend is still intact on the daily. And suggest this is your key level on the daily. So we could pop up, chop around as long as we hold above that anchor level, say around the 1500 mark on the futures. It's still considered bullish. The MAs are still holding. It's still bouncing off the MAs here. So even though we got the $30 sell-off last night, it's still, to me, nothing much has changed. And when you've got that bit of euphoria because, we're having high-level talks, which they could come about, and there's no date, don't forget. To me, it seems like they're just trying to support this market, trying to get the heat out of the market, trying to get people just, to jump back in and support the market, which is fine. But sooner or later, who knows? Either bulls or bears going to win out. If this gold starts breaking down through 1492, say another $20 or so, then I think gold's going to come under pressure, and then we've got a longer term correction, maybe something like this, or maybe a complete sell off, a big pullback, and that would be conducive to a big rally in the on the share markets. So at the moment, that's your Dow. We're going to probably heading back up into this zone. That's the sort of next key liquidity zone which we're going to find. There is a bit of liquidity through here. You can see it sort of popped up. This is a very broad zone. We popped up, we had some liquidity. So if we draw that up, sort of through here, which is where we are, we popped up in that zone, sold off, built a base, popped up, got through it, pulled back, pushed through, more liquidity to buy. Okay, we got straight up here. And then we had, that looks more like distribution to me. And then bang, we got smashed. So we built our way back up and we're sort of back into this zone. So it'll be interesting to see whether we do pull back, consolidate something like this, and then go again and have that projection up into the highs, or whether we just chop around, we see some sort of, all this buying that's being bought up through here, we have some sort of distribution again, distribution of longs and start to roll over, which you'd suggest is going to take a bit of time. So tonight we've got payrolls, a big number, ECB the week after, sometime next week, and then FOMC, which is the Fed Open Market Committee. I got that right. The week after. So there's quite a bit of data lined up. So this market, if you think about it, if it's bullish, the bulls are out. It could easily just keep plowing through to these highs. Just sort of this liquidity up here towards 27, up towards the all-time highs, up until we get FOMC, which is in 2 weeks. So there's a lot of room to move on the upside. If we get a good number tonight, might tick it off. We might end up another 200 points up tonight. We'll just have to wait and see. So yeah, it'd be interesting. I guess not much else to talk about. We'll just see where that SPY is sitting at the moment. And it's still just gets to a 5-minute chart. So for me today, you got 30 minutes up. We'll just have to wait and see whether you've got that gap up into the hole. We might get a deeper correction, sort of close the gap back to the overnight, overnight levels, up about 10 points on the ASX, and then start to hold and build and push up. Again, I always find it unlikely that you're going to get a really bullish move on a Friday after all this, the recent bullish moves already into a weekend. We just never know what's going to happen. I mean, over the weekend, you're always getting something from Trump and China. They could come out and say, yeah, we're going to put our talks back to November. We were end of October now. It's going to be around there. And then sooner or later, the market's going to go, hang on a second, how come you can't actually come to the table and start talking and get serious? But we'll see. What's everyone else's view for today? Rather than me rabbiting on, just watching this SPY. What I was going to say too, we're going to talk a bit more on this on, I'll just get to this one. So this is sort of what we've been looking at, and I'll explain how we look at this using the MAs. We've got momentum, how we sort of trade it and what we're looking at doing going forward. But I'm going to talk a bit more about this on Monday. But this is just the chart that I'll be going on, so mainly for intraday, and trying to get a hold of those momentum moves. So it was probably a bit hard yesterday, but you could have had a trade. For instance, I wasn't trading it, but you could have had any number of trades. We call it from the inside out and outside in. So the technique that we're using for buying and selling, especially intraday, is you either trade it from inside out, where it's going to expand, you get that sort of expansion and price movement, or when it gets to the extremes on the outside, where you're potentially looking for a sell. And reasonings for that, to do with momentum slowing, what sort of momentum is it, buy momentum, sell momentum, all that sort of stuff. And then just looking for trades on the back of that, and then you've got to drill down to having your own favored setup. But we'll see. Yeah, that would have been one. So 10 minutes after the open, about 10 o'clock, you could have had, so you got this pop higher, pull back, it's sort of reversion to the mean, and then it started to lift again. And you generally on the SPY, you get this sort of open, you might get a washout lower. And if it's bullish, you're going to get that secondary move higher, and you're looking to take advantage of that secondary move higher, which played out on the open. And then it got a bit choppy after that, a bit more of a grind. Could have been a trade in here, but you're sort of halfway between those two MAs. Market's going up, so you're going to be on the right side if you actually buy. This could have been a good one, but you never knew that was going to happen. That was at 11:30. I think that was on the back of China news when it spiked up. So I mean that's news driven. Who knew that was going to happen? But we'll see, guys. Let's probably finish up there. Let's just see a couple of things I just wanted to see. We might have taken a partial, did we? Yep. So we're taking a partial on ZIP Z1P at 410, and it's got through that. It's trading about there now. So if you still haven't taken a partial on that, it's worthwhile just taking some off. Especially the fact that it's rejected from the highs yesterday, so it might have got lucky with another big day today. And it's traded through the highs. We're going to be raising our stop. So it's going to be an unusual. Normally we have it below the high lows, which should really be down at 330, but instead this market and this sort of extension on the stock like this, that's actually, we got this sort of move on the weekly, it's consolidated the highs and had another move up that if this doesn't continue strong, it's going to roll over quite hard, you would expect. And I think if it's going to go in our favor, the stop's not going to matter, but if it's not, it's going to come straight through and we're probably going to get taken out high low anyway. So that's why we could probably move your stop up to around the 370 mark. I think we've got it at actually, where am I? Where are we on this? Oh, I don't know now. 370. Oh, so we've still got it there. So we'll just leave it at 370 for now. Maybe move it to 380 just to tighten that up a bit. But yeah, that's done. Don't know why this one, Flight Center, won't kick on. It's struggling a bit today. Gold, it's not coming up as much pressure as what I thought. Just be wary. Just watch out for gold. This structure is fantastic. It's just that it's been caught out. We've had this big sell-off here, washout, complete washout of all these buyers have been up here, and it's starting to lift again. So that's fine. Still got quite a bit of room. Volume quite high too. Good volume on this move up, big flush out, and it's been building since. So it's the first time we sort of set on the MAs, push higher, pull back to the MAs, popped up, retest those MAs again, and that's that inside trade we said. So that's really solid. From that, you really do expect it to take out the highs at 143. So still happy to keep that DCN even though we're down a bit. So that's it, guys. We'll call it a day there. Have a great day. Stay safe in the markets. And any questions, send it through to support at tradesetup.com.au. All right, guys, have a good weekend. I'll speak to you again on Monday. Bye.